far. It is 8:30 EST, time to start our Algo Factory Beginner Live Lab. Okay, so for anybody who might be new to this live lab, especially over on YouTube, Algo Factory is we're an education service. We help people who want to learn how to trade, how to build a trading algorithm. And then, of course, once you hear the term algorithm, a lot of people kind of go into a, this imagination of some person with real big glasses and a huge supercomputer, and they're programming, AI bots that Skynet, and okay. So algorithms are actually not that complex in the real world. Not necessarily, they can be. But when you're doing a trading algorithm, it's often, anybody who is a successful trader is probably using one, and it's not necessarily hard coded. It's just, anybody who's traded even without having a bot or anything like that, just the old school trading way. And if they're successful, I would bet everything I have, they're using an algorithm, whether they know it or not. And so what we do is we help people understand the market. We help people understand how to build algorithms, and we also help them with the basics of trading. And I'm going to go ahead and put a link right here on the screen. You can click on that. It'll take you over to our website, and it's extremely inexpensive. Go check it out. So we go ahead and take a moment here to put a link over on our one of our Discord groups so they can come in and join us. So this is a beginner show. So we do this every day at 8:30 up until 9. And what that does is, we just go over some basic stuff. Oftentimes people have real basic questions like, what is cryptocurrency, or, how do you read a candlestick on a chart, or something along those lines. And so we take this time to answer those questions. The people in our private group, they have the priority on those questions. So, their questions get answered first, but anybody out there in YouTube land will have the opportunity to ask those questions as well in the chat box, in the chat area of the YouTube. So give me just 1 second to spread this link. Your lab. Okay, so it's Friday. Friday is usually kind of a chill day. So when it comes to trading, maybe overnight, maybe at the on the London session, if I've traded it, there might be some action. But overall, Friday is a day where it's just kind of more of a study day, a day trading. I might, if there's some action, like for example, right now the USD CAD, the Canadian Forex pair, is going to have some action because they had some news. And then once the news jitters go away, that's when I might kind of run up and do some trades. So that's kind of what Friday looks like. And outside of one of those kind of scenarios, unless there's a real specific good looking day trade setup, then Friday's kind of a chill day. I chill. I look at the next week, and I go from there. So I'm also going to throw up the website here in the chat. Let me see here. And it's algofactory.tech. So, I'm just going to throw that up. You can see it right there. Hop over to that website. Again, if you click that link I had up earlier, it should take you there. But this is the website. You want to check out what we do. We do have a whole entire university on the website. Tens of videos to bring you through the basics of trading, basics of building an algorithm, treating and trading like a business, the psychological component of trading. All those things are key. If you're missing really any one of those items, you're probably not going to do well in trading. So you can have the best, nicest algorithm there is, but then you don't have the psychological aspect of trading together, and you're not going to do well because trading is hugely psychological. The same goes for the business aspect of trading. If you don't have money management set properly, then there's a really good chance that you're going to do what's called blowing up your account. And I know nowadays in the in the whole vernacular, yeah, blow it up. Like that sounds good, but that's not good in trading. You don't want to blow anything up in trading. So let's see who's around. We got VM over in our YouTube chat, and that's actually somebody who's also in our private group. We got Valley Girl. That might be the same person. So it's good to have some people saying hello, giving us a good morning. Let's see. We do have a few people in our private group watching as well, watching live. I see Trev. Trev is going to say something there. Does anybody have any questions? And yeah, it's afternoon for Trev, so good afternoon, sir. Does anybody have any questions right now? Does anybody have any kind of, beginner type questions they want to go ahead and get into? Truckface, good. Truckface is on too. I know that, the individuals that I just mentioned are kind of just getting started. They're going through the beginners area. Some of them are actually starting to build their algorithm. I got a couple of people who are a good maybe 100 tests in, which is great. So just to give a basic frame of reference, back testing is something that we do in trading, and it is a method by which we go back through the historical charts and we sort of do like a mock trade. And then we have an idea after a couple of hundred of those, whether or not a trading method is going to work. Okay. And it does tend to work best when done manually, but it can be automated. So if you do have your algorithm hard coded, then of course you have the option to automate that back testing. The problem with that, of course, is that you don't really have your fingers in the pie. You don't have your fingers in the dough. And I do find that some of my best creation happens when my fingers are in the dough and I am physically back testing. That does seem to have the best results, in my opinion. But that's kind of going a little bit deeper than we need to go necessarily for the beginners. So I've got a few people typing in the private group, just seeing if anybody has any questions right now from the basic side of things. So I got Valley typing. Valley's one of my fresh traders. So just kind of getting into trading for the first time. We have a few of those, and that's amazing that people would come and do that. People would just be willing to give this whole thing a shot without really having prior knowledge. It's amazing. And we do, and we are geared towards beginners like that, and we're geared towards also people with a lot of experience. They just will go through those classes a lot more quickly, and they'll ask different questions. Valley Girl's now asking, can you explain the different kinds of trading, like day or overnight? Sure. So there's basically day trading is when you're in and out of a trade in, say, 15 minutes. So that's like maybe, or 15 minutes. I shouldn't say that. It's it might be on the 15-minute chart. It's kind of what I was thinking there. But day trading is in and out of a trade within the session. So it's within in this case, in like a Forex case, a 24-hour period. I would even limit that to being before the market turnover, which happens at 4 p.m. EST, I believe. So that would be like getting into a trade, say, anytime between, you could say after market open at 9:30 a.m. and before market close at 4 p.m. EST, right? So that's intraday. That's intraday. Now there is intraday trading. It's usually called swing trading. So anything from like holding a trade overnight to even a few days, that's going to be considered swing trading. And then anything after that, I'm not sure what the terminology is after swing trading. You have to excuse the yawning. I'm still on a caffeine detox, and I have a young child, so not a lot of sleep right now. So sorry about that. But anything that's like longer term than swing trading, that's going to be, I don't know, after it's like months, that's just considered investment as opposed to trading. I mean, technically everything is a trade, but most trades are not going to go past like, a few weeks. Like if you're trading on the daily time frame, That means like the bars on your chart are each a day's worth of price action. That might take a few weeks. It's just those are, but not necessarily. It could take just a couple days. It just really depends on how your trade is set up, right? So I hope that answers that question. So I guess in the absence of questions, I will go ahead and start to take a look at the market. Let's see here. Go ahead and share a screen. All right, there we go. That's a lot of gobbledygook, but that is what you're looking at is a test algorithm. The real algorithm that I use is hidden in here, but there's a lot of stuff on there that I don't necessarily use. I just have that on there as like a test case. So we'll go to our friendly chart that has a lot less gobbledygook on it, and we'll take a look at Bitcoin. I think that's where a lot of people like to start. So let's do that. And like I say, today, audience seems rather quiet. So we'll just take a look at the market. Okay, so we did have a fun week. We had this was like a what do you call it? There was a news event. So crypto had some interesting stuff this week. The SEC went ahead and put out a lawsuit against Binance, right? So they're saying Binance is carrying securities and has not registered properly with the SEC. And then they're doing the same thing to Coinbase, basically. Coinbase being the 400-pound gorilla, if you will, in the business, or 800-pound gorilla, whatever they say in the vernacular. And that actually did send price down. And again, I talked about this just the other day. I think it was Tuesday that I discussed this at length. But I drew what this trade would look like, and it's pretty close to reality. I did say right about here that price was supposed to fall. It just looked like it was going to fall. Price had been ranging for almost a month, and it started to get weak. And right as price got weak, the news came out. And this kind of goes into trading news and whether or not, that is a great idea. And it's a common conversation to have. This was unexpected news, right? So there's news and there's news. There's economic data that is expected. We know that it's coming out. For example, let me bring up a website. So this website here is the forexfactory.com. And even though it's a Forex-based website, it actually applies to like all the markets, especially when it comes to the USD news. So for example, yesterday at 6:30 a.m. was the unemployment claims, right? Now, did that affect crypto? That's a good question. So, and that's 6:30 a.m. Mountain Time. So that is going to be 8:30 a.m. EST, which is what most people are watching. So one way to look at it would be to look at the low time frame chart at 6:30 a.m. my time. Mountain. See, that's Thursday. Friday. Okay, so Thursday at 6:30. So there was a move, but it wasn't a move that was terribly out of the ordinary. It was just this wick, this green wick that kind of shot up. Technically it had an effect on crypto, but it was such a low effect. So that tells me that crypto is kind of relatively stable right now, unaffected. But if we look at Forex, we might see something different. I know we will, because it was a massive move at that same time. Thursday at 6:30 sparked a rally. Okay. So price was already set to go up, but it did kind of spark a rally. So if you look right here, and that this candle that went up right there, that was the news. It wasn't a huge effect overall. I think it was either priced in or one thing about the news yesterday was it was an unemployment number. So the unemployment claims were higher than normal. And on this Forex Factory, if you take a look and if you click right here, so where it says, all the data on this kind of folder, it'll tell you that actual less than forecast is good for currency, right? Well, in this case, the actual is higher than forecast. And what does that mean? The unemployment claims right here. If you look here, the number was 261,000, which is higher than the expected 236, which in and of itself was higher than the prior month, right? And when numbers come out higher than expected, that's when the market gets a little bit of a shock. And so when unemployment is higher, the way that this affects things is that the Fed's mandate is, number one, to fight inflation, keep inflation low. Number two, to keep unemployment low. Those are their dual mandate. And with unemployment being high, what that does is that says that whatever the Fed is doing with regard to inflation is starting to break things a little bit, right? If unemployment was low, that means that the economy is functioning well, right? And that means that raising the rates has not had a negative effect yet. But now that we see, unemployment being higher than expected, then the interpretation, whether or not it's true, is that the rate hikes that have been going on are basically, causing problems in the economy and raising unemployment. And so that interpretation is extrapolated to say, okay, they're going to have to start stopping the rate hikes. They're going to have to pause the rate hikes. And if this continues, they're going to have to actually do rate cuts and go back to more of an easier financial conditions, loose financial conditions, cheaper money, right? So how does cheap money work in the market? And therefore, how does expensive money work in the market? So as the rates have been hiking, money has been getting more expensive. Now, all the money that is, not all, but virtually all the money going into the market nowadays is borrowed, right? Your large companies are, using their corporate debt to finance stock buybacks. You have, you have money that is being created by banks and given to these asset managers in order to, basically buy stocks. I mean, it's not as simple as that, but it is in a roundabout way. That's how it ends up working. And when money is expensive, that causes less investment, right? When creating money at a higher interest rate happens, it's more expensive. So to borrow is more expensive. And then the rate of return that we're getting from the stock market is negated by the rate caused by, these rate hikes, right? So it's like, oh, well, we're going to just put our money somewhere else. So that being the case, or we're just going to, save money, or, what they're not going to do is they're not going to borrow to deploy, right? They simply may not borrow at that point. It's just like right now with the mortgage, the mortgage situation. Now mortgages are, I don't know how true it is, but I've seen that reports of a mortgage being like, 30, 40, 50% higher in some cases because the rate is much higher than it used to be. So, what used to be a $4,000 mortgage is now a $6,000 mortgage. So who's going to mortgage and buy a house, or who's going to borrow money at that rate? You used to be able to borrow like $100,000 on a HELOC at, 3%, 3.5%. Your mortgage was, or your payment might've been, I'm just going to pull a number out of the sky because I'm not really a mortgage guy. I was going to say your payment might be $800 or $800 a month or something, right? And then now all of a sudden that same 100,000 is going to cost you 1,200 or 13 or 14. Like that's not, now that's like a half of a car payment more, if not a whole car payment, right? So why would you borrow? Why would you invest? Does So that's where we are in the world. Well, when this news came out with unemployment being higher than expected, then again, the interpretation is that the Fed needs to stop hiking rates and even start cutting rates in the future. And cutting rates means money is going to be cheaper. So the market goes ahead and says, oh, well, we're going to start investing. We know more investment is coming, so we better get in on this early. And you have these little spikes. So that is the picture on the surface. Now, some of the picture that we're not talking about necessarily is, at least we haven't talked about it so far today, is that the banks use these news events as a carte blanche to kind of push price around and knock people's stop losses out. So just see if we can find a strong news event to talk about that real quick. Let's see. We'll go back to say, okay, so right now we're in June and FOMC is going to be on the 14th. So let's look at May 17th. I think that's the last FOMC. Maybe it was the week before that. May 10th. CPI, here's a good one. So Wednesday, 6:30 a.m. CPI. Okay, so that's May 10th. So we'll go to our chart and we'll take a look at Wednesday, May 10th. And we'll see what happened when the CPI report came out. CPI is a big look right now. CPI is an important metric at the moment because, and this is a really good example of what we're talking about, by the way. So CPI is the Consumer Price Index, and what that is it's just a measure of inflation for the consumers. And inflation is the Fed mandate, number one, it seems. And so, it's, I don't know, number one, number two, but it seems to be the most important one right now. It's the one they talk about the most. Unemployment is not, it seems to take a backseat to that in the headlines, right? And so CPI, if inflation is like high, then the thought is that they're going to have to continue to hike rates. So if the inflation came out higher than expected, you're going to think like, okay, we're going to have to continue to hike rates. And as you hike rates, it's harder to borrow money and less investment happens. And in this case, CPI was actually as expected month over month. Year over the year, it actually came back lower. And core CPI, which is CPI minus, I think, gas. Let me see. Excluding food and energy. So core CPI is like CPI, but it doesn't count food and energy. That actually came back a little bit higher. So it was mixed numbers. So however that was interpreted, you had this, even though it was kind of mixed and it might be hard to even think, oh, what's going to happen with that? Well, you have this massive spike up. Now, if you look at the chart, price was on a downtrend, and it might be that a lot of people thought price would continue to head down, especially after this kind of right at the top of that arrow right there, right at like midnight, or I should say 1 a.m.-ish, price took a heavy fall, right? And then price kept heading down. So a lot of people were probably like, oh no, price is going to go down. You even have these kind of hard moves down before that are all happening the day before. And then all of a sudden price just goes up really high. So what might have happened here is that as price kept heading down and people started like considering, oh, well, maybe there's a downtrend. Maybe the news on the CPI is not going to be that, it'll be whatever. Maybe CPI is going to be low and they're going to have to hike rates more or whatever the number. I said the wrong thing there. Maybe CPI is going to be high. They're going to have to hike rates more. And so people thought price would go down. And so what a lot of them did, I can almost guarantee it, was they went short as price was going down. They went short right there. And they had their stop loss maybe above this prior peak right there. And then they probably had their take profit, somewhere down here, because the general trend was down. And as you can see, after the announcement, price did continue downward, right? So that might be what the trade looked like. And the people who run the world and run Forex and have, Bloomberg terminals, and they just have a lot of access to data, they knew where all the stop losses were. So what they do is they use these bank these economic data announcements as just an excuse to push price earnings. That's not legal. To move markets like that, to knock people's stop losses out, that's not legal. But hey, it was FOMC or it was CPI announcement. Like, it just happened on its own. It wasn't us. We swear, wink, wink. So they just knocked out these stops. And then people probably went short again, like, oh, the move happened. So, like they already knocked the stops out. So let's go ahead and go short, So people probably went short again right here, right? And then maybe some of them had a pretty tight stop, and then maybe they got knocked out on the way down here, but price ended up continuing down lower. So price was in the end supposed to go down. A lot of metrics said that it would, but that little quick push up here was, very, very possibly these kind of high level people taking people's stop losses out. And when that happens, if the price is going down, your higher level traders also know price wants to go down, and they want to get an entry, and they want to get an entry up high. So if they're pushing price up here, then people's stop losses are effectively a buy order. So, you have a stop loss, like say right here, and then right there. Well, if price goes through that, then getting out of a short trade, because again, these trades were short trades, they got knocked out. Well, getting into a short trade is a sell order. Getting out of a short trade is a buy order. So pushing price through these stop losses actually causes the retail, that person who was in that trade, it causes them to buy out, and it pushes the price up even more. So taking advantage of these people's buy orders is what those are, is going to push the price up more, and they don't even have to pay for that. They just got to pay to get the price up to where everybody's stop is, and then everybody else's stops does all the work for them. And then they go ahead and enter way here up at the top, probably using a VWAP, which is a way to enter large positions. And they probably had orders waiting up here as well. So, and it's all very measured, and these people know what they're doing. And then they probably accumulated shorts all through this area where price was just kind of hanging out. And then of course they went ahead and made money as price continued on down. So this is why when it comes to news, I wait for the news jitter to go away. I wait for this kind of action right here to calm down. And then I relook at all the metrics. And once the initial reaction calms down and all the leverage is wiped out of the market, I go ahead and make my move on that. And that didn't happen until the next night at midnight. So the midnight session. I don't believe I was awake for that, but that would have been a nice short take. So this was kind of today's class, for lack of questions, ended up being mostly about, trading the news, how I do it. Again, none of what we say is investment advice. So, you definitely want to consult a licensed investment advisor before risking your money on the markets, because you can lose money. It's inherently risky. And of course, anything that we say in these videos is just our own opinion, and it's not the opinion of any other person or company. So go over to algofactory.tech, head on over there, go ahead and click on that if it allows you to. If not, just type it in your browser. We're giving this thing away right now, $59.99 a month. I mean, let me say that right without mumbling. $59.99 a month. That's worth hundreds of dollars a month. Just so you understand, the price is going to eventually go up. Whoever gets in while the price is at $49.99 is going to keep that price. It'll be grandfathered in for that tier of service. Okay. So, this is not a price we can actually afford to keep this low. We simply can't afford it. So it will go up. So if this is something you're interested in, there's never a better time than now. All right. Well, we're going to hop off of YouTube. We're going to move on to the private chat. So thank you all for coming. Smash that like button. Don't forget, if you're on YouTube watching this, that's going to help out the algos and spread the word. The bigger the community, the better. And we have a good community already over at Algo Factory that are helping each other grow. And they also have a lot of good information. Yeah. VM says, come on in, the water's fine. Yeah. VM is one of the numerous, I'd say a pretty decent number of brand new traders who's going through the classes and really treating this like what it is. It's not a get rich quick. It's a marathon, not a sprint, and it takes work and dedication. But once you do get through that, and again, people, we design this for people who do have a job. They have like a 9-to-5. They don't have time to sit at the computer all day. That's what we designed this for. So, an hour or two maybe for 5 days a week, dedicated towards studying and eventually towards backtesting, that will get you where you want to go, as long as you are doing that in an undistracted and diligent manner. So this isn't something that you need to dedicate, 6 hours a day to. However, if you do, the results will come faster. So at that, that's it. That's all I have to say about that. So thanks for coming, and we'll see you next week. Monday live show.